Hello students, hope you all are well. Let us start our next video. Next video, it will be based on elements of accounts part 1 standard 12. All of you know the which chapter was going on. The fifth chapter was going on. Fifth chapter is admissions of a partner. In this chapter, introductions previous two video I already told, and what you have to learn from this chapter, that also I explain. And also once again I want to tell you that in this chapter 8 mark 1 practical complete sums, it will come in your board exam, and this 8 marks, to do this 8 mark sums, I told you the previous video, these 5 practical points which you have to understand, that is according to your textbook page number 144. Out of these 5 points, the first points, how to find out the new profit and loss sharing ratio, that previous two video I already told you. Today I will tell you the second point, which is called accounting effect relating to the goodwill. Very carefully you try to understand the second point, accounting effect relating to the goodwill. After that will come the third point, fourth point and fifth point. Once again students, I want to tell you the 5 steps which you have to complete to do this 8 marks complete sums. Out of that, first I already told, the second today I am going to tell you, that is called accounting effect or relating to the goodwill. This is the second steps for practical sums of 5 marks, that is called admissions of the partnership firm. In this second step, it is coming accounting treatment of goodwill as per accounting standard 26. Just 1 minute, let me tell you the page number where from I have taken this one. Yes, I got it. In your textbook page number 152, in your textbook page number 152, the point number 1, 2, 3, 4, 5 and 6, these 6 points today I want to tell you. Once again I want to tell you, page number 152, 1, 2, 3, 4, 5 and 6 points. Students, before telling the accounting treatment of goodwill as per the accounting standard 26, this is the second steps of your practical sums. But most of the students, I have seen that one, that where they are doing mistakes in these questions, they are feeling difficult to understand this point, accounting treatment of goodwill. 95% students, 95% of the sum they will do complete. Only 5% which is they are feeling difficult, this is this point, accounting treatment of the goodwill as per the standard 26. So everyone try to follow this one and try to understand what is the second point. I know that one, there may be the few adjustments are there in these sums, but almost all the adjustment all will be able to do except this adjustment where you will feel difficult for accounting treatment of the goodwill. Now all of you know what is called goodwill, because third chapter I already told you how to calculate the amount of the goodwill, that also you already understood. Now question is there, when the new partner is coming into the business and adding with the old partner, then new partner has to bring certain amount for his capital. Whatever the amount he is giving to the business for his capital, it will be as it is in his business for his capital. But old partner can claim some extra money from the new partner, that is called goodwill. So what money the old partner will claim apart from his capital, that is called goodwill. Now question is coming, how much he will give the amount for goodwill, and this amount how in which way the old partner will take. Generally, the formula is there. When the new partner is coming to the business, old partner is sacrificing certain share. So amount of goodwill whatever the new partner is bringing, that should be shared by the old partner according to the sacrificing ratio. This is the main rule. Once again I want to tell you, the new partner apart from the capital, not the capital it will be as it is for the new partner. Apart from the capital, whatever the extra money new partner is giving to the business as goodwill, that amount old partner will take according to the sacrificing ratio. But accounting treatment of goodwill, there are the total 6 points are there. Very carefully you try to understand. Total 6 points are there for accounting treatment of the goodwill. This is page number 152 of your textbook I have taken. You can go through from your textbook also. Number 1. When goodwill is paid privately by the new partner. Number 2. When premium for goodwill is brought in cash or kind by the new partner and it is retained in the business. Number 3. When premium of goodwill is brought in cash by the new partner and it is withdrawn by the old partner fully or partly. Number 4. When new partner does not bring his share in goodwill in cash. Number 5. When the new partner brings his share in goodwill partly in cash. And number 6. When the valuations of the goodwill is made on the basis of the partner's capital, that is called hidden goodwill. Confusions already started coming to your mind. Don't be so confused. Let it be the 6 points. Actually, the combinations of all these 6 points, actually 2 points are there. One, he will bring the cash. Another one, he will not bring the cash. But there are so many other points are there that I want to tell you one by one. You follow it. The first one. Once again I am telling you, in this sum, this is the point what I am going to tell you. It will create problem for you. So many students, they are not understanding that how will calculate the amount of the goodwill. Sometimes it will not be given directly in the questions. How will calculate the amount of the goodwill brought by the new partner? Once if you are able to calculate, then second question will coming that it will be distributed in which ratio, to whom, to which account will debit, which account will credit. So many confusions will be there. So simple, very simple method, simple formula I am telling you that to follow it. Number 1. When goodwill is paid privately by the new partner. What is called the meaning of privately? Privately means the amount, goodwill amount the new partner is giving to the old partner, it is not coming in the picture of accounts. That is called privately. It will not be included in the accounts. It will not be distributed. Just orally, the old partner is telling certain amount you give. It will not shown in the accounts. That is called privately. So when there will be a contact between the old partner and the new partner, that new partner will pay the money to the old partner privately. That time the amount accounting treatment of the goodwill for the first point will not come. It will not come. Keep in mind generally that no transactions will come here. For that I wrote it here. When goodwill is paid privately by the new partner, no accounting entry will be recorded in the books as it is paid privately. Privately matlab that it is not coming in the picture of accounts. So first point is over. Now how many are left? 5 are left. Come to the second point. Out of this remaining 5 points, that is gist or the main point is there only 2. That is that you try to understand what is these 2. So let me say the second point. When premium for goodwill is brought in cash or kind by the new partner and it is retained in the business. So what is called the meaning? I told you that new partner will give certain amount for each capital. Apart from the capital, the old partner can claim certain money from the new partner for goodwill. Sometimes it happens that new partner, after paying his capital, he can say that I don't have money to pay you extra for goodwill. That is called the when new partner is does not bring his share of goodwill in cash, or the new partner can give the cash for goodwill. The second point is there that he is giving the cash for the goodwill. So either he can give the cash or he cannot give the cash for goodwill. Second point is there, he will give the cash. When premium for goodwill is brought in cash, premium for goodwill, now amount for goodwill, the new partner is giving for cash or kind. Kind matlab not giving the cash, is giving some assets, it's called kind, by the new partner, and it is retained in the business. What is the meaning of the return of the business? The amount whatever the new partner is giving, either it is a cash or it is a kind, it will be exist in the business. It's called retained in the business. Sometimes it will happen that amount whatever the new partner is giving for goodwill, the old partner is withdrawing. That time it is not returning in the business. That point also it is there, I will tell you. So second point is there, new partner will give some cash, extra cash. What cash? Extra cash apart from each capital. That is called goodwill, and that goodwill it will be retained in the business. Matlab old partner will not withdraw the cash. So we are coming to the second point. Second point is there, when premium for goodwill is brought in cash or kind. Cash or kind matlab cash means cash, kind means in place of cash he can give the some assets, just a furniture or that land or the building or anything else, by the new partner, and it is retained in the business. In this second point, you have to pass the only two journal. In each steps, how many journal will come? First one, no journal. Second one, third one, fourth one, fifth one, and sixth one. How many journals for each step? I will tell you. The second point here I told, here you have to pass only two entries. One for bringing the cash for goodwill, and second one, whatever the cash he is bringing, that is distributing to the old partner. So what this journal I am telling you only for goodwill. So two entries you have to remember. One, the first one, cash account debit, but again and again I will not tell you cash oblique bank. Cash or bank you can understand. Cash account debit to premium for goodwill. Premium for goodwill it is credited, and next journal premium for goodwill account it is debited. So premium for goodwill debit and credit it will be cancelled. So first journal is cash account debit to premium for goodwill. How much amount? Goodwill amount. And second journal is premium for goodwill account debit to old partners capital account or current account. Here I wrote old partners. Here I have not written to Mr. A's capital, to Mr. B's capital, or to Mr. C's capital. It will be like that. If two persons are there, to A's capital, to B's capital. If three are there, A's capital, B's capital, C's capital. So these steps you have to pass how many journal? Two journal. One, cash is coming, cash account debit to premium for goodwill, and this premium for goodwill you are going to transfer to the old partners capital account, premium for goodwill account debit to old partners capital account. Now let us see one example so that you can understand that what is the second point. So next point is coming, that one thing you have to keep in mind. I wrote it here by red pen. Here just now I told you the two journal you have to pass. One for bringing the cash, second one this cash you have to distribute to the partners. But everywhere, if in your questions the existence goodwill is there, existing goodwill is there, matlab already in your business certain amount goodwill is there, That goodwill we have to distribute to the old partner first. That is the actually first entry for every step if it is there. I think you did not understand. 1 second, I want to tell you. Here I wrote all the above 6 points for accounting treatment of the goodwill. The first point entry will not come, that I already told you, and for the remaining 5 points everywhere first entry will be for goodwill existence in the whole partner, that you have to write up. What? The old partner capital or current account debit to goodwill account. What is this? This will be the first entry. But when? If it is given in your question, the goodwill balance for the old partner. Old goodwill if it is given in the balance sheets. That goodwill you should distribute to the partners to whom? Old partner. So old partner capital account debit if 3 are there, S capital account debit, B capital account debit, C capital account debit to goodwill. This is which ratio? It will be given in the old ratio. This is shown in the balance sheet, that old ratio it will be distributed. Keep it in mind. Now we want to come to the one example. Example I have taken from your book. From your book I want to explain the example. See the page number 153 of illustration 10. 153 of illustration 10. I want to explain this one from your textbook. I have not written the journal. I will read the questions and I will explain the answer. Everyone will follow that one. This is accounting treatment of the goodwill. Out of the 6 steps, second step is the new partner is bringing certain cash for goodwill. That is C. Ahana and Amina are partners sharing profit and losses in the ratio of 3:2. So Ahana and Amina, the old partner, profit and loss sharing ratio is 3:2. They admitted Aman is the new partner, as a new partner for 1/4 shares. The goodwill of the firm is valued at rupees 1,20,000. I will want to explain what is the meaning. Aman has to bring rupees 50,000 as capital. This is for his money. This is not goodwill. He is giving 50,000 for capital, and his share of premium for goodwill in cash. And whatever the premium for goodwill amount for him it will come, that he will give in cash. I told that he may give cash, he may not give cash. So he is giving cash. Pass the journal entries regarding the goodwill. See here, old goodwill is not given. Old goodwill not given means first entry I already told you. The S capital account debit, B capital account debit, C capital account debit to goodwill, that we will not pass it here. If it is there, we will pass it. Now 2 persons are there old, that is Ahana and Amina, 3:2 ratio, and Aman is coming for 1/4 share. Goodwill of the firm, this is the questions. Goodwill of the firm. Sometimes the students are thinking this amount is the goodwill for Aman, not like that. Aman goodwill you have to calculate according to his share. His share is 1/4. So he will bring 1/4 of 1,20,000. 1,20,000 is the amount of the goodwill for all 3 persons. So this is for the firm's goodwill is 1,20,000, and the new partner's goodwill will be 1/4 of 1,20,000, which is coming 30,000. So he will give the 30,000 extra money for goodwill, which the Ahana and Amina will take according to the sacrificing ratio. So first entry I told the 2 entry will come. First entry, cash account debit 80,000. Why it is 80? Because 50,000, for this 50,000 which is giving capital, that journal is cash account debit to new partners capital account. New partners capital account, Aman's capital account. So cash account debit to Aman's capital account, and 30,000 whatever the amount of the goodwill is coming, that entry is cash account debit to premium for goodwill. So cash account debit twice, one for 50,000, another for 30,000. For that cash account debit here 80,000. So cash account debit to Aman's capital, that is 50,000, 50,000. Once again cash account debit to premium for goodwill. This is combined entry. This is combined entry. Cash account debit to premium for goodwill, which is coming 30,000. So your first entry is cash account debit to Aman's capital, cash account debit to premium for goodwill. Now this 30,000 premium for goodwill which was credited in the first entry, that will be debited. And to whom we will credit? To Ahana's and Amina's. Now 30,000 premium for goodwill account debit to Ahana's capital to Amina's capital. Now 30, this 18 and 12 how you are getting? I told that one that you have to find out the sacrificing ratio. He is getting 1/4 share, the new partner, and how much is Ahana and how much is Amina is sacrificing. If you find out the sacrificing ratio, you will get 3:2. 3:2 is the sacrificing ratio. That I will not tell you how to find out the sacrificing ratio, all of you know. The amount of goodwill, whatever the new partner is bringing to the business, that the old partner will take according to the sacrificing ratio. So, old partner's capital account debit. This is the premium for goodwill account debit to old partner's capital account. Sacrificing ratio, it is already there in your textbook, it is calculated, but you all of you know how to calculate it, so I am not telling one, that one you understand. This is the second step of 6 steps. 6 steps what I told. The first one is transaction will not come, second one I told you. Now which one I will say? The third one. What is the third one? The when premium for goodwill is brought in cash by the new partner and it is withdrawn by the old partner fully or partly. Before telling the third one, the second point something is left. Let me complete it. After that I will tell you. Because second point it is said the cash or kind. This is called kind. This is called kind. Page number 153. Page number 153, that it is given the cash and kind both. See, if you read the questions of illustration 11, you will find out the new partner is giving land and building, motor car and cash. All three is given. This is called kind and this is called cash. So land and building account debit, motor car account debit, cash account debit to parts capital to premium for goodwill, and premium for goodwill account debit to old partner's capital account. So if kind is coming in place of cash, that also will come. The things whatever he is giving, that one is called kind, not cash. Now we are coming the third point. Third point is when premium for goodwill is brought in cash by the new partner. Previous also cash was there and it is withdrawn. This is the change. It is retained in the business and it is withdrawn by the old partner fully or partly. That means it is not retained in the business. So new partner is giving cash, but the old partner is withdrawing. Which one? Not capital amount. Which one? Goodwill amount. Which goodwill? Which the new partner is giving extra money for goodwill that they can withdraw either fully or partly. This is the third point. When the new partner brings his shares of goodwill premium in cash and it is withdrawn by the old partner. Here how many entries you have to pass? 3 entries will come. So second point 2 entry was there. Here 3 entry will come. This 3 entry you have to keep it in mind. So once again I want to tell you that first one no entry, second point 2 entries, third point 3 entry will come. Which 3 entry? First one will come cash account debit to new partner's capital account to premium for goodwill. That is the common from the previous. Second point, premium for goodwill account debit to old partner's capital account. That also common from the previous. And this is the new one, the old partner's capital account debit to cash. This is the amount for withdrawing. So one extra entry will come, the how much the old partner is taking, either it is fully or it is partly. Let me show you once again. The cash account debit to new partner's capital account to premium for goodwill, first entry. The second entry, premium for goodwill account debit to old partner's capital account, second entry. And third entry, the old partner's capital account debit to cash account. Example, page number 159, illustration 14. That I want to take from your book, 159 of illustration 14. This question I want to explain it. This is based on the third point of accounting treatment of goodwill. A, B and C are the partners sharing profits and losses in the ratio of 3:2:1. When you read the questions very carefully, keep in mind old partners name, how many are there, what is the old ratio. They admitted D as a new partner. D brought 80,000 as capital. This is the amount for his capital which no one will touch, and 60,000 as goodwill in cash. The cash process is going on. Then 60,000 he will give extra for cash. New profit and loss sharing ratio of A, B, C and D. It is decided 4:3:2:3. I will not tell you how to find out the sacrificing ratio. Every one of you know this is the new ratio. This is the old ratio. 4:3:2:3 means 4 plus 3, 7. 7 plus 3, 10 plus 2, 12. So this is the 3/12 is the ratio for Mr. D. Old partner withdrawn 50% of their share of the goodwill in cash. So whatever the D is giving 60,000 amount for his goodwill, that the 50% amount, this is 60,000 as his capital and 60,000 as goodwill in cash. It is given 60,000 as goodwill in cash. Previous example, 1,20,000 was there. That was the goodwill for the farm. Here it is given 60,000 is not goodwill for the farm. This is 60,000 is goodwill for him. Keep it in mind. So that is the another point. Most of the students they are getting confusions. Here amount of the goodwill for him it is given. The previous sum amount of the goodwill the farm it was given. New profit and loss sharing ratio of A, B and C and D is this. Old partner withdrawn 50% of their share of the goodwill in cash. Now what about the 60,000 is coming? That 50% the old partner is withdrawing. Past necessary journal entries and partners maintain their capital accounting by the fixed capital method. So how many entries I told you? 3 entry will come. Here the old goodwill is not given in these questions. So old goodwill is not given means we will not pass the distributions of the old goodwill entry. The first entry I told cash account debit to D's capital. D's capital is how much? 80,000. So cash account debit to D's capital, that is 80,000. And he is giving cash extra for how much? 60,000. That cash account debit to premium for goodwill. So first entry cash account debit to D's capital, cash account debit to premium for goodwill, that is 80,000 and 60,000. The second entry premium for goodwill account debit, that is 60. This 60 will be 0 to A's current account to B's current account. A's current account and B's current account 40,000 and 20,000. I already told you that I will not tell you. This is the sacrificing ratio. Of course, if you find out the sacrificing ratio of A, B and C, here you will find out the D is coming in your question, that sacrifice by A, by B and C. It should be not that one. Sometimes it happens that C is not sacrificing. Whatever the sacrification ratio is coming, that is A and B is coming. So C will not get. AB is giving share to D. So D's goodwill amount A and B will only you will get. If you find out the sacrificing ratio, you will find out that D sacrificing is 0 and A and B is sacrificing 2:1. This from this amount I can understand that's 2:1 because 40-20 matlab 2:1. So premium for goodwill account debit to A's current account to B's current account. C account is not coming. Now that they are withdrawing. Who are withdrawing? Whose capital account was credited or current account was credited. They are withdrawing. How much? The 50%. 50% of 60,000 comes 30,000. So their entry is there. A's current account debit, B's current account debit to cash. How much? 30,000. This is the amount, that is how much they are withdrawing. 50%. मतलब 40,000 का 50%, 20,000, 20,000 का 50%, 10,000. If you find out, you have to find out that only C sacrificing is 0. Here you see C sacrificing. I told you the sacrificing ratio old share minus new share. For A it is 2/12, for B it is 1/12, for C it is 0. The sacrificing ratio of A and B, C is not coming, 2:1. I think you understand the first point, second point and third point very clearly. This first point, second point and third point, these 3 points, it is on the base of the amount whatever he is bringing for cash. First entry will not come, second he is bringing for cash, third is bringing for cash. The next video I will tell you that new partner does not bring his share of goodwill in cash. I told out of these 6, the 2 things were coming. One, he is bringing the cash, that is say first, second and third, though I am telling first, but first entry will not coming. Now we will tell you 4, 5 and 6 where he will not bring any extra money for goodwill. In that case, what we will do?